All right, so let's get to the third option. The third option is to make this a second home. And then how the Canadian side looks at it, of course, when you are leaving this, we will have a deemed disposition on this property. So you make sure that you get the capital gain exemption. Till the day you were living in Canada, the fair market value versus the cost. The capital gain, there is no capital gain, and you should be exempted from the capital gain. So make sure we get that exemption, and we claim that exemption on the on the Canadian side. On the US side, if you do make this a second home, we gotta make sure that we claim the tax treaty benefits to get the fair market value as a cost on the US side when you do sell this property, or you can keep it. But the US will tax you once you do sell it. The same on the Canadian side too. Canada will tax you too, because it is not your primary home anymore. So that means secondary home, there is capital gain tax on it. And then on the Canadian side, and that is also true on the US side. So the difference will be the rate. There is no double taxation. There might be additional taxation, but that is okay. So the main point is that on the US side, we are able to claim the tax-free benefits if you do make this a second home, and there is a deemed disposition. So whenever you move from Canada to United States, any assets that you own beside the Canadian real estate, besides certain other retirement accounts, everything else, stocks, jewelry, your personal, if they're more than 10,000, there is a deemed disposition. There is a departure tax on those there on the capital gains. So make sure you plan ahead. Make sure you understand your options. What's going to happen on the US side once you get there. Make sure you understand how the Canada is going to tax you. We have to make sure all this. If you can plan this, you can simplify your taxes. You can really do yourself a favor, and then simplify the Canadian side and the US side. I've seen cases where people move, they don't search for their options, and once they have moved to the United States, then they are in a limbo, because what happens is you have become a non-resident for Canadian tax purposes. That means a lot of things kick in when you're trying to sell the property on the Canadian side. There's withholding tax. There's certain forms that needs to be filed within a certain time frame, and then you have to file your tax return to get your money back. That for in some cases could be a couple months, could be 6 months, could be 1 year, and that's a lot of time. Your money is stuck. So make sure that you are able to understand how Canada taxes you on the properties or the assets that you own when you're leaving Canada, and then how the US will tax you. Make sure you find a cross-border accountant or tax accountant that can help you on both sides. It is very important. It is very important, because there's a lot of treaty exemptions that we can use on the US side to help with some of the double taxation. I've seen a lot of accountants miss those. So again, 3 options. One option is to sell your property, your main home, which is the house that you were living in. Second option, to turn it into a rental property, how Canada taxes and how the US will tax. And third option is to make this a second home. And any questions, shoot us an email, and we'll be able to help you. Thank you.